Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Dan Schwartzman. Doug Krisner is off this week. Asian stocks opened higher on Monday following 2 consecutive weeks of declines as easing trade tensions between the world's largest economies bolstered sentiment. Shares in Japan and South Korea rose while Australia dipped after the region's equities fell on Friday amid concerns on U.S. regional banks. Also, one of China's most important meetings begins on Monday. Chinese President Xi Jingping and other ruling Communist Party elites will gather in Beijing to map out goals for the next 5 years. For more, we heard from Fabien Yip, IG International Market Analyst. Yip spoke to Bloomberg's Shery and Annabelle Droulers.
What will you be watching out for this week? Because plenty of data to digest coming from China, but also at the same time, all of these trade headlines as well.
That's right, Shery. A lot of things to watch out for this week. Today, it's going to be a very important day for China as we see the plenum kicking off in China. So it's going to be a 4-day session where we'll be hearing from the Chinese leaders talking about the social as well as the economical agenda for the next 5 years, so 2026 to 2030. We expect to see a lot of news around how they will be controlling the deflation problem in China, as well as developing the AI and tech advancement in China. So a lot of things to watch out for. Obviously, personal changes will also be an important topic that we'll be focusing for the meetings. And obviously, outside of China, we see in Japan that there will be a lot of key developments on Takaichi's potential election at the lower house. So maybe we'll see a new prime minister in Japan being elected.
Staying with China first, though, Fabien, I mean, you said it, we do have plenty of data, and a lot of it could actually point to more weakness. But at the same time, an incredible rally in Chinese stocks. MSCI China headed for its best year since 2017 or so. Does that rally have legs, especially given the AI theme that you also mentioned?
Yeah, I think there's a lot of optimism being priced into the Chinese stock markets right now. But if you look at the corporate earnings, I think the numbers are quite pretty diverged, I would say. We're seeing roughly like a below 2% earnings growth in companies that are listed onshore. And if you compare that to the US, where we're seeing earnings growth of low teens, we do see a stark difference. And there could be a discrepancy between how the market is looking at potential growth in AI as well as biotechnology. But at the same time, the corporate earnings are yet to reflect that. So I would be a little bit cautious on that. And last week, an interesting observation as well, where we saw tech and AI stocks did pull back from their highs, and there was a sector rotation into SOE companies that did pretty well during the years before. So that could be an interesting trend to watch.
It does seem that markets, the sentiment is still pretty fragile because we've seen elevated volatility, for instance. What do you think that sets us up for in terms of the key risks that are facing traders as well?
Yeah, I think we did talk about a lot of trade headlines, so I think that's going to definitely still dominate the market sentiments. The other thing to watch is obviously how market is expecting rate cuts to come in quite aggressively once in October and once in December. That has already been fully priced, and that has also been moving asset prices up, including stocks as well as things like gold and silver. So if we will be hearing, obviously, the CPI report later this week, if the reports come in a bit hotter than expected, or if we're even seeing a huge deterioration in the U.S. economy, this could derail stock markets and risk assets quite a lot. So that would be a key risk to watch as well.
Yeah, and of course, the US government shutdown has been blocking a lot of the key data to date. You mentioned Japanese markets before. What do you anticipate in terms of the market dynamics if we do get political clarity on that front as well?
Yeah, I think the market has already slightly been reflecting that earlier this morning in the yen. We did see that it held at the dollar yen held at a 150 level after a recovery of yen last week. With the clarity on Takaichi's premiership, I think stock markets will be poised to do pretty well this week, and the yen could weaken towards the 153 level. So those are some key levels that we're watching. But obviously, we need to watch out for risk on how the trades have been pretty concentrated right now in certain companies. So corporate governance is an interesting and important area to watch out for, where we think that it's important to be stock pickers instead of just buying the market.
That was Fabien Yip, IG International Market Analyst, speaking to Bloomberg's Annabelle Droulers and Shery. Coming up next, we'll hear from Nicholas Smith, Japan strategist at CLSA, to discuss the latest in Japanese politics. Welcome back to the Daybreak Asia podcast. I'm Dan Schwartzman in for Doug Krisner. We go to Japan next, where the Ishin opposition party held an executive meeting on Sunday as it mulled the possibility of joining forces with the ruling party, a decision that could determine the country's next prime minister. For more, we heard from Nicholas Smith, CLSA Japan strategist. He spoke to Bloomberg's Annabelle Droulers and Shery.
What does this mean? Japan's Ishin party and LDP coming together. Does it change the policy direction and the implications for the markets, or are we sort of broadly on the same page?
Surely, from the point of view of market, it just strengthens the position that Komeito had always been something of a sea anchor on what they were trying to do. The two, Komeito had been a serial turncoat. It hadn't supported them on a lot of the things the LDP was trying to do. So the advantage of taking in Ishin is it's bigger and it's more aligned. So whereas Komeito had 24 seats, the Ishin's got 37 seats. It takes them pretty much to the 233 seats they need for a majority. Not quite, but they'll, I'd not have much trouble getting the support of other parties to push things through now.
Those two parties are now more aligned. Does that mean that we could see a doubling down of the Takaichi trades, that her points of view become more relevant now to the markets? Weaker yen, BOJ delaying perhaps rate hikes, a lot of the trades that we've seen so far.
I'm not convinced that the government has power to control the Bank of Japan. I mean, obviously, it got its independence from the Bank of Japan law of 1997. But on top of that, the time when you get to influence a central bank is when you're changing the governor or the chair. And so that's an issue for the US at the moment because Powell goes out in May. It's not an issue for Ueda because he's got 2.5 years more to run. So I think that he may well assert himself. We have a problem in Japan with the cost of living crisis. He absolutely needs to do that. It is strange that the politicians have failed to see. They've talked about giving tax cuts, which would certainly irritate the Ministry of Finance, and they haven't tumbled to the idea that actually a very large part of the inflation we have here is imported inflation, and all you need to do is hike.
The fact that you bring up the Federal Reserve and the fact that they are going to see these changes at the FOMC, is that does that give you an indication that no matter what happens, because of what the Fed is doing, we might see more strengthening of the Japanese yen, because at the same time we're just going in opposite directions?
So with the Fed, of course, President Trump is looking for a person that he can depend on to cut more. And, of course, the Federal Reserve moves in bigger steps than the Bank of Japan does. So they're more important in all of this. But I think the Bank of Japan will be wanting to raise rates. So I think people are getting worried about that and getting overexcited by the politics. But the situation on the ground is a serious cost of living crisis that's been holding back consumption in Japan.
What about the also trade talks and this prospect we see further trade talks between the US and Japan? If President Trump makes a stop later this week, will that be also something that has an impact on market sentiment, do you see?
I see Takaichi being more forthright about things than beleaguered Ishiba was. So I think that it'll be much more of, what's the quid pro quo for what you're asking for? I think that the trade talks are pretty much done, and you can't particularly like a 15% import tariff, but the Japanese can probably live with that.
Given where we're headed with political changes, not to mention, of course, the trade negotiations that they seem to be done with, but at the same time, you never know with President Trump. What are we going to see in terms of volatility in the JGB space? Of course, we've seen a lot of movement in the long end.
Well, obviously we've had a big pickup in the ultra long end, and that's been a global move, but it's also concerns about increased inflation in Japan. So we had a drop on the short end and an increase in the long because people are saying, I'm worried that they won't continue with the policy moves. I think that they probably will continue with the policy moves, and I think that that'll rein in inflation a little bit, which will mean that the ultra long end will calm down a bit.
How consequential are JGB moves now to global markets?
I think ultimately the concern is that Japan, there's not only the yen carry trade, there's also the vast amount of Japanese money overseas. So the net international investment position is best part of $4 trillion, whereas the carry trade, BIS says $250 billion. I think more likely, plenty of leverage, it's probably about twice that. But those two together, as soon as the yen starts to strengthen, then people will be worrying about the yen carry trade and then about repatriation of Japanese markets, Japanese money. And obviously, ultimately, what that means is worry about some of the more fragile markets out there. So within bond markets, say Europe, perhaps, the French bond market, and then a lot of stocks that had moved up too far too fast. There'll be questions about them.
That was Nicholas Smith, CLSA Japan Strategist, speaking of Bloomberg's Annabelle Droulers and Shery.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.